The ICT New York Killzone is honestly one of the best strategies I have tested. It wields me great results and it forms so often I'm almost able to catch a new trade from it about every couple of days. So in this video I'm going to be going through what is the ICT New York Killzone, what times and pairs does it form on, how to trade the ICT New York Killzone, and how to ensure a high probability setup with the ICT New York Killzone. So before I get into today's video, I just want to thank you guys so much for 1,000 subscribers. It really means so much to me, and I just really want to thank all of you for the recent support on the channel. So for this, I decided to do a massive giveaway on my prop firm passing service. So as you guys can see here, I've done a little giveaway for those in the Telegram group. So if you're not in the group, please join up. And honestly, guys, this is the best opportunity you guys will ever take. There's nowhere else on the planet where you can give someone such a small amount and get 6 figures of capital back. As you can see, we've passed the client's 200k challenge. We've had a client get a payout. We've had another 200k passed. These are all people whose lives have been changed in a matter of days. They've had their challenge passed within days. So guys, do not miss out on this opportunity. If you want to be funded with up to 6 figures in capital, we are the cheapest and most secure prop firm passing service out there. Make sure to join the Telegram and send me a message at M's Capitals on the Telegram, and I wish to see you funded there. So now I know I haven't updated the group for this, however, this offer is currently off as all slots are taken. However, I will be running a bigger and better giveaway in the future. So make sure you guys join the group and do not miss out on this giveaway. The price will be the cheapest it has ever been. You will never find the price this low anywhere else. So make sure you guys join the group and you message me so you do not miss out. Okay, moving back onto the video. What is the ICT New York Killzone? So before you trade any strategy, you want to have a rough idea of what it is you're trading rather than just blindly following rules. So the ICT New York Killzone strategy is a time-based trading model that focuses on certain time intervals which are highly volatile. The New York Killzone is categorized by its unpredictability. The market can move in any direction during this time, and traders who can quickly adapt to these changes can reap the benefits. So I'm going to show you guys how you can be on the positive end of this, where you can reap the benefits rather being on the end of taking losses. So let's get into it. Times and pairs. So I've put here New York time for at the top, EST, and for you guys in the UK, I have GMT time here for you guys. For New York time is 8 a.m. to 10:30 a.m. For UK time it's 1 p.m. to 3:30 p.m. And as for pairs, USD, GBP USD. As for indices, SPX 500, NAS 100, and US 30. US 30 is not talked about a lot, however, it is a wonderful indice. I haven't been trading it a lot, however, the trades I have taken on it have been great on US 30. So if you guys do trade on US 30, this strategy will work on it. And I just want to add, guys, whenever I recommend you guys pairs, this is not to say go trade every single pair. Say if you normally are used to trading forex pairs, stick to your forex pairs. If you're used to trading your indices, stick to your indices. The less pairs you trade, the better. So now I'm going to take you guys through a step-by-step plan on how to trade the New York Killzone. So moving on to our step 1, which is our liquidity sweep. This is a simple step. We wait for a liquidity sweep either to the downside or to the upside. Now, if we take liquidity to the downside, such as in this scenario, we want to look to long the market. So if we did take liquidity to the upside, we want to look to short the market. In addition, guys, the liquidity sweep does not have to be within the time zone, within the kill zone. It could be before. The kill zone is only there to say we can only place our trade within this time. So I've also added here key liquidity levels for you guys. You guys can go read through that yourselves. These are all key liquidity levels that can be taken. Now moving on to step 2, we just want to wait for market to enter order block or fair value gap based on our liquidity sweep. So if we took liquidity to the downside, we want to look for order block or fair value gap below that for market to enter and potentially reverse off of, so we can catch a long in this scenario right here. So just wait for market to enter the fair value gap or order block. And as for entries, I'm going to go through that on the next step. The entries is a little bit complicated with this model. And without said, moving on to step 3, which is our entry. Entry is different for every scenario. Now, I say this because the biggest problem with ICT traders is they try to trade with zero conviction. They trade with strict mechanical rules like a robot, which is not right. Market will be different every time, so you cannot trade like a robot. You are not a robot. So entry might be different for every scenario. So I've created three different entry models you could use for this exact setup. This leads us on to our first entry model, which is our order block entry, which is simply to enter aggressive off a valid order block. Now, if you guys check out my last video, I showed you guys what a valid order block is and the proper ICT version of the order block instead of the Smart Money Concepts order block. So guys, make sure to check that out so you familiarize yourself with order blocks. So for this entry, just simply wait for market to tap into your order block, place your limits, place your stop loss above a swing high, and then wait for a trade to play out. Simple as that. Moving on to our ICT entry model. This one is simple. We simply want to wait for a market structure shift. So a market structure shift is when the market sort of creates a reversal, a change in momentum. As we can see here, market is bullish, 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 and we start to get that bearishness right here, where this candle closes above this swing high. This is how we know this market structure shift is valid, and we get a fair value gap left here. This is our displacement candle right here. As you can see, market shoots up quickly with a lot of volume, creating displacement, creating our inefficiency in the market, which market would presumably have to come back and return to. This gives us a great opportunity to enter. So I would recommend you guys mark out your fair value gap at the 50% mark and enter off the 50% mark. Usually, more times than not, market will come to the 50% mark of the fair value gap, and this just decreases your drawdown. So it helps a lot. Make sure to do that. Simply enter off your 50% mark of your fair value gap and wait for market to hit your take profit. So now our last entry model, which is the engulfing candle entry. This entry model is a little bit different. You're going to have to be active on the markets for these, watching the charts. You cannot place limits for this one. So simply, you're going to wait for your liquidity sweep. And while the liquidity sweep is happening within our kill zone, you're going to wait for the first engulfing candle to form and then place your trade off that. As you can see, we got our liquidity sweep, and then market formed the first bearish candle right here, and it closed below the closing point on this candle, making it a bearish engulfing, and I entered off that. As for targets for your take profit, simply target opposing liquidity. Check the other slide. I've gave you guys a list of key liquidity levels. That would be your take profit. And I recommend you guys partial. This is all down to your own risk management strategy. However, I recommend you guys partial, as trade will not always go your way. It may go, say, up to this point and before reversing. You never know. You cannot 100% control or ensure any strategy. Moving on to real market example. I'm going to hop onto TradingView, guys, now and show you guys a couple examples of the New York kill zone in the real live market. So, alright guys, I'm on USD currently. I'm on the 3-minute time frame, and I have my time delineation marked out here from 8 a.m. to 10:30 a.m. This is our New York kill zone. So firstly, I'm going to be looking for market to take out liquidity either to the downside or the upside to find whether I'm going to be longing or shorting the market. So what do I see? I see an obvious and beautiful area of equal highs. I'm going to mark that out for you guys. Now, from here, I want market to take out this liquidity to the upside, so then I can short the market. So let's see what market does. Let me turn up my speed for you guys. And lo and behold, market takes out the liquidity. I'm going to replay market for you guys a little bit and hop onto the 1-minute time frame. Now from here, I use the engulfing candle entry method. This is simple. I was on charts on the 1-minute time frame, simply waiting for the first orange candle in my scenario, the first bearish candle. So there, that is our engulfing candle right there. As you can see, the closing point on this candle is lower than the opening of this candle. So it is an engulfing candle as it engulfs this candle right here. Place my stop loss above the high. Take profit. As for take profit and targets, I do recommend you guys partial. However, my My final take profit would be right here at 64 pips. Where would I partial? I'd partial somewhere here or here. It's completely up to you guys. It's personal preference. You can do it at support levels, at resistance levels, wherever. So first partial would be here. Second partial, if you guys do find an order block within here, you could place your second partial there. And final take profit right at the equal low. Okay, so let's play out the trade. Let me hop into a higher time frame so it goes quicker for you guys. You guys will see. We smash our take profit. This is a sniper exit, sniper entry. This is absolutely perfect trade. This is beautiful. You would have caught yourself a 1 to 5. Now it may not always be a 1 to 5. Sometimes market just may come up to here for a 1 to 3 reverse. However, this is forex, unpredictable. This is why you partial. And by here, if you are partial, your first partial should take out a majority of your position. That's just how I trade. Again, guys, partialing is all up to your own risk management strategy and how you like to manage your risk. So develop a good risk management strategy and stick to it. So with that said, on to the next example. All right, guys, I'm on the NASDAQ. I'm on the 5-minute time frame. So I'm going to firstly be waiting for a liquidity sweep either to the downside or to the upside. So let's see what we get. Play a market. Boom. You can see we've taken liquidity to the upside. Now if I replay market a little bit. Not bad. Now we're going to be looking for fair value gaps or order blocks to enter off of. And there's 2 clear order blocks I have spotted. One was here. And the other was right here. Now, how do you know which order block is valid? I would consider this order block more valid and higher probability trade than this order block, as this order block has liquidity against it. As you can see, we've got the swing high, which market would likely be attracted to come take out, tap into this order block, then sell off. So this is an induced area of demand. So I'll take this order block right here, simply place my limits and enter aggressive. If we measure it, it's about 20 points. Simply wait for market to enter your order block. Stop loss above this high right here, for example. And as for take profits, first take profit could be here. Second take profit right here. Third take profit right down here. Let's see how it goes. Okay, so there you go. Sniper entry and a great exit. This was a 1 to 6 nearly. So if you risked 1%, you would have made 6%. 2 of these trades can pass your funded challenge. It's as simple as that, guys. All right, guys, I'm on USD to show you guys the final example. Now, this example did not hit my final take profit. However, I still want to show you guys this, as it is nature of any strategy. It will not always hit your final take profit, and this is why we partial. It's so key to partial in any strategy. So I've marked our order block down here, and I'm going to wait for market to take it. You can see it does, taking out liquidity to the downside from here. And there could be other points such as here, for example. Now, we've tapped into our order block, and I'm going to wait for a market structure shift now. I do not want to enter or aggressive of such a big order block. If we measure this out, it's about 14 pips. So I'm going to wait for a confirmation on the lower time frame. Actually, no, I won't. As you can see, market has left a lovely area of imbalance right here, which we can enter off of. We've got our market structure shift right here. Now, some people may say this is not the true market structure shift and say this high is or this high is. However, if we play market, you see it taps in perfectly. Market runs away. So if we were to place our limit at 50% mark of our fair value gap, if I actually mark that out right now, bear with me guys. So my first take profit was right here, second take profit was here, final take profit was all the way up here. So fortunately it did not hit up here. However, let's see how it goes. So as you can see, I played out, first take profit hit. At this point, we've broken this structure. I'd move my stop loss to break even. Play out market. Boom. We would have finished with 21 pips in what I don't consider unsuccessful trade, but what a lot of traders would. So thank you guys so much for watching. I will be uploading more frequently. I just came out of hospital from a broken hand, so bear with me guys. But thank you so much for the support on the channel. Make sure to join the Telegram for the passing service. I'll see you guys next time.